Hey, everybody, and welcome back to the Teaching Tax Flow Podcast, episode 192. As I said a few episodes ago, we're revisiting an old friend, and we're going back looking at the home office deduction. So basically, the home office deduction explained. Now, what exactly that means, you probably heard of it, took advantage of it, but do you know exactly what it is, or even more importantly, what it is not technically? We're going to talk about it. So whether you're listening to this at your home, in your office, maybe home office, I have to go ahead and say that, in your car, walking a dog, anything like that, you are going to want to listen to this one, because I would wager a bet that this is probably one of the most, maybe not misunderstood topics, but maybe something that's almost so common people forget about it, right? So let's hear about this one. Chris Picciurro, welcome back to your own show, sir. Let's talk home office.
Well, thank you. And I'm recording this from my home office, which is, we're going to explain today why this qualifies as a deduction. And one of the reasons we want to revisit this, John, we look back, it had been over 3 years since we had an episode on home office. And over that time, we've expanded the reach and the community at Teaching Tax Flow. And it's very, very, very common that taxpayers do not take a home office deduction when they're absolutely entitled to it, in fear of an audit, or in fear that they're just mostly in fear of an audit this was one of those things. It's up there with my frustration on misuse of an S corp, right? But so we're here to help guide you and make sure that the taxpayers understand, and tax professionals too, what qualifies for a home office and when you should take it. So absolutely excited about this one. And this is one of those that this home office deduction could be extremely valuable for somebody. And you should take the home office deduction if you're entitled to it. Why pay more tax?
And it's great. And you're right. And you know what's ironic about this, right? Is, like you said, so more people miss this, or they're afraid to take it. But yet there's less fear in doing something else, right? We won't say anything specific, S corp or any of this stuff, that is actually much more troublesome in some sense, if not done correctly, right? So it's kind of ironic a little bit, like this is so simple and it's right there in front of them, but yet sometimes their focus is on something else they think is more impactful. So let's explain this one and debunk some stuff.
Right. So let's talk about what the IRS requirements are. And I want to backtrack. As you know, John, I spent a few years as a tax season updates instructor for the National Association of Tax Professionals. Enjoyed meeting other professionals. And I'm not saying that to pat myself on the back, because I didn't put together the materials. They did. And they're really good materials. I'm saying this because we had about a 2-hour block a couple years ago just on home office. So if tax professionals are spending that much time teaching each other and talking through this, it is a common misconception, not only for taxpayers, but tax professionals as well. So let's jump into it. Home office deduction. What are the IRS requirements to qualify for that home office deduction? Now, we understand a lot of times there's black, there's white, and there's gray, right? We want to make sure we're legally and ethically reducing the tax we pay in our lifetime. So think about your space that you're working in and if it's going to qualify for this. Or if it's a space that might not qualify, is there something you can change about the space to make it qualify? I want you to remember also, home office doesn't have to be a specific room. It could be a portion of a room or a portion of a space. The requirement is it has to be a regular and exclusive use for business purposes and your principal place of business. So, John, I'm going to talk about my space very transparently. Yes, I leave my space, I leave my home office to do meetings once in a while, probably grumpily, right? Unless I'm going to play pickleball, then I'm pretty happy to leave.
When you do have to leave that office there, you make a point. You're not in the best mood sometimes.
Sometimes I'm like, oh gosh, I love people, but get comfortable here. So
yeah,
I do business other places, right? As you know, we travel, we go to client meetings and et cetera, et cetera. But this is by far my principal place of business. I do about 90% of the business right here in my home office. It's regular use and it's exclusive use. So for me, we decided to build a apartment above our garage a few years ago. And it's a 2-bedroom apartment. One's the John Tripolsky suite when he visits us here in Franklin, or guests or friends. But the other bedroom is specifically a home office. I don't have a bed in here. I don't have an inflatable bed. John has helped me appoint this place really well as a podcast studio. I've got a whiteboard. So if you've watched any of our teaching tax law videos, clearly this is exclusive use here for business. Now, do I walk downstairs sometimes and return emails at the kitchen table with a coffee? Absolutely. I do that multiple times a week. But this is still my principal place of business. Do I get to deduct some of the kitchen? And John, quite frankly, we've recorded a bunch of quick tips in our family's kitchen talking about tax tips. And we have a lot of cool visual aids about marginal tax rates and tax extensions with coffee and all this cool stuff. Can I deduct my kitchen? No. Do I use it for business? Sometimes. Is it my regular place? No. Is it exclusive use? No. Our family, of course, John, we've got 3 teenagers. So half the time we're sitting on the couch or running, we don't eat all together as much as we'd like to. But the kitchen area is not my principal place of business. It's not. Do I use it for a business? Yes. Does it qualify for a deduction? Absolutely not. But this space does.
So I hope. And with that too, I can see a lot of people. Oh no, go ahead. Go ahead. I'm sorry.
No, I'm diving into my personal situation so people can. A lot of people have these situations. Like they might store inventory in their garage. And they want to deduct a portion of their garage, which is fine. But you can't deduct your entire garage if you got a vehicle in there. If you've got a couple motorcycles and you've got sports equipment and that sort of stuff.
Right. And I've heard of this a bunch of times where people say, well, I have a home office. I use this room. It used to be a spare bedroom. We converted it into an office. That's perfect. But then every once in a while, I forgot who said this at some point, and you had a really direct, I think kind of chuckled at them a little bit when they answered their own question. But I think they said that, once a month or something, they have a meeting at their dining room table or their kitchen table. So what percentage of that room could they deduct? And I think you asked that question, like, well, is it exclusive? I forgot how you worded it. And this was probably 4+ years ago. And it kind of answers itself, right? Like it's not intended for that, even though you use it. Like you can't deduct your bathroom because you like to take a shower and talk on the phone at the same time. You can't do it. Right. So that to your point about your own kitchen.
Mm-hmm. Right. And I could even be renting a space where I go twice a month. Let's say if I have a client meeting, it's a co-working space or an entrepreneur incubator, and I don't have a desk there. I just rent the office because let's say a boardroom or but that doesn't mean I can't take a home office because this doesn't have to be my only place of business, but it clearly has to be my principal place of business. That's where it comes down to. Now, let's assume I'm self-employed. We'll touch a little bit on S Corps and C Corps. So let's say I'm a partner in a partnership and I'm deducting my home office as a UPE, unreimbursed partner expense. I have 2 options, right? I can take the simplified method and the actual expense method. Now, the simplified method, so we've established that you have a home office deduction. The IRS says, we're going to give you a simplified method similar to a standard deduction. However, it's not as generous as the standard mileage deduction, for vehicles. So without having to track any of your utilities expenses, your rent expense, your mortgage interest. Oh, by the way, little nugget, you don't have to own a home to take the home office deduction. You could be renting a home to take the home office deduction. But the simplified method says, IRS says, all right, if you have a qualified home office, we're going to give you a $5 per square foot deduction up to 300 square feet. So the maximum deduction is $1,500. Not the most generous, but at least it's a deduction and it's easy to administer. You don't need a lot of documentation. You don't have any depreciation to take on your home. And one of the reasons that this is attractive is that if you're taking the mileage deduction or deducting a vehicle, we know that commuting miles are not deductible. But if you establish a home office and then you have miles leaving from that home office, now those are deductible. So even though the value of the home office deduction tax-wise isn't high as far as the home office deduction, the value it gives you to establish that's your principal place of business, and when you leave there, gives you that mileage deduction is valuable.
Here's a question, actually. I'll throw you a curveball. No, go ahead again. Sorry, no, my mind's racing here, and I cut you off again. No, you go ahead, and then I'll share my
simplified. You could take simplified, the $5 a square foot, max of $1,500, or you could take the actual expense method. In the actual expense method, we are measuring the square footage of your home office and dividing that into the total square footage of your home to come up with a percentage. And we take that percentage against your expenses. What your indirect expenses? What does an indirect expense mean? Utilities, insurance, property taxes, repairs, mortgage interest, depreciation on the home, rent, any of the things that are indirect to the house. Now, you also could deduct direct expenses. So that could be internet, but you could have an indirect expense as an internet. So real example for me, as you know, John, because you help with this. We have internet for the house. That would be an indirect expense for me. We got a separate provider specifically for my home office of internet that we don't have the kids' devices on it. Why? Because I need as fast of internet as possible, and I can't have 8 other devices for TVs and refrigerators on the internet for my work, and I need it super fast. So we have a special internet. So that for me, that's a direct expense. But if you just have one internet, then it would be an indirect expense. So you've got to identify direct versus indirect expenses, and you can take those indirect expenses multiplied by the home office deduction. Now, I'm going to say there are some nuances, right? Some unique situations when it comes to daycare, where it comes to you built a barn and you use the entire barn as a business expense. Then it's really not a home office. That's a separate dwelling or separate unit. So a lot of times facts and circumstances come into play, but for the vast majority, you got, the simplified method or the actual expense method. And I want you to think about for clients or taxpayers in those really expensive states, those high tax states, the simplified method's probably not going to make sense. If you rent an apartment in Manhattan and, probably not the least cheapest, but let's say you have the ability to rent a 2-bedroom apartment in Manhattan and you use one of the bedrooms as a home office that qualifies, it's probably going to be like 40% of your living space. So the deduction is going to be 40% of your rent, 40% of all these. So it's going to be much more valuable there when you look at. But if you live in a more rural area and you have a 4,000 foot square home and 150 square foot home office, even though you have your house is expensive to maintain, you're only getting a sliver of that. So again, that's where it comes into play as far as planning around, how to take that home office deduction.
And you pretty much answered the question. The example I was going to bring up, say somebody has, well, here, we can make it even a little bit more of a curveball for you, so I don't leave you hanging. So if somebody has, say, a detached structure that's their home office, it's on their property, right? So that would qualify if it's exclusive use. So that it's probably going to be more than 300 square foot. So they'd probably do the actual, and then they have maybe another random spot in their home that they use for something else business related, and then something else. So you're basically taking the sum of those 3, putting it together against the overall square footage, right? Like it doesn't have to be quote unquote one box. And
this podcast is brought to you by Strategic Associates. Are you a high-income earner, real estate investor, or successful entrepreneur who is frustrated by having to pay $75,000 or more of annual tax liability? If so, Strategic Associates can help. Your first step to saving thousands, if not hundreds of thousands, is to contact Roger Roundy at roger@strategicag.net or by calling 801-641-2956 and be sure to tell him TTF sent you.
You could, but if you have a separate dwelling, so for instance, let's say you have a client that is a taxpayer that is has a plumbing contracting company, right? I literally just went to a friend's house that owns a cleaning business. They're not clients, and the cleaning business they have a dwelling. They have a lot of land, right? But they have their dwelling. They built a separate garage where they have 2 trucks for their crews and keep all their cleaning supplies. So that's not a home office. That's a whole separate dwelling that they could deduct that real estate. But then they have to determine, is it separately metered for utilities? So there's going to be some indirect expenses there as far as real estate taxes, maybe maintenance. but there could also be some direct expenses specifically for that unit or that structure. Now, if they have that structure, but then they have an office in the home, then you could have a home office and that structure. But most of the time when people build a separate unit where they're putting like work vehicles, a lot of times they'll build an office upstairs, or they'll kind of break that out. So the more common thing would be just you have a home office that you're not but you could have a situation where you have a home office, and let's say you sell, let's say you're an author, right? And you sell books, and you have a closet in your home that you ship the books from. Then you can deduct the square footage of that little closet. I mean, you could. Because why? Nothing else is happening in there. You just have books. So it's a lot of times with facts and circumstances. The most important thing is this is that your primary place of business, principal place of business, and regular and exclusive use? Because people say, well, I have a spare bedroom, but my parents stay there, but I have okay. That's not going to work. But some people I've seen have converted like a living room, and a third of it got converted to a home office. So you could deduct a third of the living room, because remember, it doesn't have to be an entire room. So I want to wrap on this. So home office, Schedule C, you're going to take that simplified or actual expense. You're going to fill out what's called a Form 8829. If you are a Schedule C or single member LLC taxed as a sole proprietor. If you're a partner in a partnership and your partnership is not reimbursing you for home office and you're eligible to have a home office deduction, consider taking a UPE, unreimbursed partner expense. That gets reported on page 2 of your Schedule E. Finally, if you're an S Corp or C Corp, things get a little more complicated. Do not be afraid of a home office. Seriously consider having an accountable plan. Talk to your tax professional where the entity can reimburse you for the home office tax-free, just like you get reimbursed as an employee for mileage and stuff like that.
Absolutely. So really, we started this off saying it's most likely something simple. And then we went off and we talked about some of the complexities that it can grow into. But most of the time, it's pretty straightforward what it is. And you're not putting a nail in your potential IRS audit coffin, really. I mean, it's there, right? Chris, I look at it, if I was on the other side of the fence, right? If I was the average taxpayer, I might look at it as, well, how am I going to prove this? Or there's a lot of what ifs in their mind. Maybe that's why they don't take it, or they seem it's too good to be true. But honestly, right, it is very cut and dry, black and white in the IRS publication, in their rule book. They put it in there. They're offering it to you. Take it. Take the damn thing. It's literally right there. Yeah, if they didn't want you to do it, they wouldn't put it in there, right?
Right. If you're eligible for it, take advantage of the home office deduction. And guess what? We are working in our private CPA practice. Real story. I'm bringing on a new client that was eligible for the home office and didn't take it. And we're amending the return to take it because it's a significant deduction that they're eligible for. Now, if it's going to make a $30 difference, do you want to amend your tax return to take it? Probably not. But again, those are things that you want to look at. So pull out your tax return. If you think you're eligible for the home office, check it out. Or just jump into our private Facebook group, Defeating Taxes, or comment here on this YouTube video, and we'll reply. And I appreciate everyone's time.
Absolutely. Absolutely. So if anybody needs advice on a home office deduction, you can go read the 7,000 pages or whatever it is in the IRS publication. It's there, as we mentioned. Check it out. We're just not pulling this out of thin air. It's something, it's valuable, and frankly, it's pretty easy. So let's close on that note. We started with saying it was easy. Let's end on it for the most part. You guys have a great week. We'll see you back here again on the Teaching Tax Law podcast. Have a great week, everybody.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciurro is a registered representative of Cabot Securities and an investment advisor representative with Cabot Advisors, LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabot Securities or Cabot Advisors.